In this part 4 of this special 5-part series, we ask the question, what should a compliance officer ask for in terms of data and how should they ask for it? Hello everyone, this is Tom Fox, back again with Vince Walden for another episode in our 5-part series. We've obviously been talking about data and data-driven compliance. So Vince, today I wanted to ask you, what data should a compliance officer ask for and how should they ask for it?
I love this question because this really gets to the heart of just where do we begin doing a data-driven compliance program? What do we do around data analysis? So many compliance professionals that I see just want to get started with some data, and they look at their whistleblower data or their survey data. And that's not really, they do some analysis, they maybe put some summary statistics or charts together, but how do they really get started? And really what it comes down to is your risk assessment. So if you're a compliance professional and you've got a 2024 goal of, hey, we need to do something, we need to do more around data analytics, and we need to do more, what's this whole generative AI? What's this whole machine learning? And are we using data visualization? Are we running, there's so many tests and algorithms that we could be running across the data to maybe find high risk third parties, what have you. Funny, you disappeared, but now you're back, Tom. So my point there is you start with your fraud risk assessment. So again, you could do all the analytics in the world, but if it's not part of your fraud risk assessment, why do it? So my suggestion is that you start with your fraud risk assessment. And from your fraud risk assessment, you identify what's risky. Are we seeing, what are the fraud risk schemes or the compliance risks that we see on the horizon in the future? And let's put in mitigating controls around that. Do we have controls in place? Yes or no? But for those things that are on your x-axis likely to occur, what's the scale of 1 to 10? And on a scale of 1 to 10, what's the impact? And for those in the upper right-hand corner, those high frequency and high impact risks, we want to make sure that we have some analytics or data controls to remediate it. Sometimes it's anti-bribery and corruption. Sometimes it's cyber. Sometimes it's procurement fraud or theft or conflicts of interest or theft of assets. Sometimes it might be, nowadays, it's especially sanctions risks. Are we somehow shipping through or freight forwarding through Russia or a sanctioned country? But all those have data sources behind them. So again, start with the risk assessment, and then from that risk assessment, say, all right, what data sources give us transparency into that risk? And brainstorm where those risks come from or where the data sources might be. So if it's anti-corruption, of course, we need to know who the third parties are that we're dealing with. Okay, we've done due diligence, but how much have you paid those third parties? That comes from the financial accounting system. Now, are we paying those third parties? Are they distributors or are they agents or sales commission? Or are they employees paying bribes or what have you? Or are they third-party vendors that are receiving kickbacks or bribes or discounts or what have you? So those are the types of data sources that you think about. Now, there's one other factor. So start with the risk assessment and then move on to how easy is it to get the data. Some data is very difficult to get, and you want to be able to prioritize how easy it is to get the data relative to the value. And so if you have the choice, if the risks are the same, and you have the choice of doing a data analytics project in Brazil versus China, it's easier to get data, although it's somewhat changing a little bit, it's easier to get data out of Brazil or the United States or Mexico than it is in China. So if you're going to start and pick your first analytics project, go with the Brazil first. You don't have to do all countries or all regions and all data sources at the first time. You can pick your highest risk location and then demonstrate success and then add country by country over time. Again, compliance monitoring isn't supposed to be an end-all be-all, all-at-once master program. Don't boil the ocean. It's supposed to be a journey where you're proactively doing risks assessments and monitoring from location to location. And as long as you can demonstrate that you're constantly improving, I think you're meeting the regulators' expectations of an effective due diligence program. So let me pause there, Tom, and see if you have any questions.
Vince, in an earlier podcast, we talked about looking at areas that had high growths of sale, whether it be a geographic region, whether it be individual salesmen, perhaps commission sales agents or distributors. Could you use a variety of, rather than base it on your risk assessment, could you go to other data sources and run queries to see if there are anomalies?
Yes. And when you think about all the different data sources out there, there are, like I mentioned earlier in a previous discussion that we talked about, there are vendors, customers, and employees. In fact, when I look at my analytics platform, let me show you an example. Can I share my screen real quick, Tom? And I'll show you this risk assessment and how that might look. Let me share my screen. And this kind of gives you that bird's eye view of what this might look like. So if you can see my screen, you'll notice I have T&E, which is employees, procure to pay, which is vendors, order to cash, which is customers. But if I want to look at vendors, for example, and have that bird's eye view, you'll notice that when I can take hundreds of thousands, in this case, like it's 180,000 transactions, and you'll see this broken down by country. This is a way to visually see 180,000 invoices across 11,000 vendors and geospatially, and being able to risk prioritize. So if I go under my transaction view, to be able to say, here's the 180,000 invoices, and the number one riskiest payment got a score of 24.97 because it hit on round dollar amount. It's less than the posting date. It was keyed in on the check. The AP key date is later than the check date. All these risk triggers, and be able to go in and flag them and look at the invoices themselves and do some OCR and see the image and see the receipt. That's huge. And that brings transparency kind of right to your fingertips. And being able to have those types of decisions, whether I'm looking at invoices, payments, or purchase orders on the vendor side, or even on the order to cash side, the sales side, I can look at payments and commissions, margins, etc., and see where my sales are and see what high risk transactions are in that. Let me just jump over. I'll show you some examples of some algorithms while that comes up. Like in sales, there's distributor sales, outliers, there's free charge, free products or goods, channel stuffing type risks, third party type risks. Again, there's just hundreds of different tests that can be added. And around procure to pay, there's even more. When I think about all the different types of tests that can be run for third party risks, conflicts of interests, transaction anomalies, segregation of duties, etc. And I'll show you here. I'll open this up and show you. Show me the vendors who are sharing phone numbers with employees, or vendors sharing bank account numbers. And I want to give those a higher risk score so that they'll show up higher in my risk profiling, and they'll be at the top of my list for review. And like I said, there's just scores of tests that can be automated when you run your data through. But again, this is starting with your risk assessment. Are we looking at risks around employees, vendors, or customers? I like to call it in my modules, we have the procure to pay, there's T&E, procure to pay, and order to cash. And that's your customers, your vendors, and your employees. That's really those are the areas where people can rip you off. And that's where we see a lot of risks.
Vince, what about,
let me stop sharing.
Say ancillary but adjacent areas of inquiry? In one episode, we talked about charitable donations as a source of funds for bribery. Can you look at those areas? Can you look at marketing spend if it's distributors so that other financials that may not be directly compliance, or compliance may not have direct oversight on, but they could look at those and have the KonaAI tools correlate those to sales?
In every accounting system, the beautiful thing for compliance professionals who don't, obviously you're not, or you may or may not be too familiar with the accounting process, but everything has to be booked to or expensed to something. So marketing expenses have to go into a marketing category when they're expensed. And so within marketing, there's probably a commissions folder, there's events, there's trade associations. Any dollars spent for marketing get tracked there. And you can with any kind of tool, but what we designed the Kona platform to is to take those data sources and be able to filter on any one of those expense categories and view them for anomalies and, of course, risk score them so that they can be made available to the user. The beautiful thing about accounting for compliance professionals is that it has to be tracked somewhere. And that's why the miscellaneous account, which is in every accounting system, there's always a general ledger category called miscellaneous, which means I don't know what I'm going to book this to. I don't know what it is or how I should book it. And maybe if it's suspicious and if I don't want it to get caught, I'm going to book it to the miscellaneous catch-all expense category, which is a beautiful place for compliance professionals to look for potentially improper payments or hidden relationships. Same goes with charity. There's always an expense when a company makes a donation. It's booked to charity expense. You're going to want to look at that and look at the transactions and dollar volumes in charity. What's this $100,000 charity expense going to some government official or something? And again, usually those things would get flagged, but you want to have transparency into those types of high risk account categories.
Vince, the Department of Justice in 2019 actually mandated that compliance have access to all data silos within an organization. There are some other legal and court cases that talk about that, but we now have a sort of a benchmark or a backstop that compliance has to have access to these data sources, whether you call them data lakes, data silos, unstructured, structured, doesn't matter. When you sit down and have these conversations, do compliance professionals understand their obligations to have access and actually utilize that data in some form of data-driven compliance?
And I was hoping you'd get to this, Tom, because it's important that it's just as important how you ask for it than what to ask. Because how you ask for these typical type of structured data sources is in some kind of flat file dump. So you need to be able to say, hey, in our accounting system, what is it? It's SAP or Oracle. I need the general ledger categories for charities and marketing expenses, and you list the high risks or based on your risk assessment. And then when you ask for the data, you'd want to ask for it, for example, in a flat file. Or if it's coming out of their accounting system, they got to export it to you sometimes. They can export it in an Excel dump, and you're going to want to say put it in a CSV file, or comma separated file, or some kind of delimited file. And you want them to make sure that it's clean, it's error free. We usually use like semicolons or pipe delimiters, so that separates one field from the next. And it's important that they include the header information so that you know that the field name is a vendor name. It's not just a bunch of data dumped. You have to have the field names at the top so you know that, hey, this is the currency, and then this is local currency, and this. So make sure you ask for a flat file with the header information in some delimited format. Now, when the data sets are large, over 1 million or 2 million records, Excel is not going to handle it. So you're going to need to have it in a flat file. And those flat files are usually what we take in our KonaAI platform that read right into our analysis engine. But being able to ask for the data in the right way so that IT can understand it is very important. You can't just say, give me the data. You have to say, please provide me the data in a flat file, comma delimited or pipe delimited or semicolon in a delimited file with the header information included. And then obviously don't just email it to me or don't just send it over an unsecure wire. You got to make sure that the data transfer protocols are meeting GDPR, making sure that the data privacies are there. You're not transporting credit cards or social security information. You got to think about PII. There's ways to ask for it, but it's definitely being done, and it's not that hard. You just got to know how to ask for it.
Vince, unfortunately, we are near the end of our time for this episode, but I hope our listeners will join us again for our next and concluding episode. But before we leave, I wanted to ask if our listeners wanted any more information on yourself, KonaAI, or perhaps the best way to get in contact with you. What can you tell them?
Thanks, Tom. You can get in touch with me. I'd first say visit our website at KonaAI.com. Fill out a quick information and request a demo. We'd love to hear from you. You can also email me at vwalden@KonaAI.com or my colleague Matt Lauer at MLOWERRE@KonaAI. He leads our sales, and we would be happy to chat.
Vince, I wanted to thank you again and look forward to continuing this conversation.
Thanks, Tom. Take care.
This is Tom Fox again. I hope you'll join us tomorrow for our fifth and final episode where we take a look at some compliance wins and successes using data analytics. I hope you've enjoyed this series, and I hope you will subscribe, rate, and review to Data Driven Compliance wherever great podcasts are listened to. Data Driven Compliance is a production of the Compliance Podcast Network.